If financial independence is important to you, but you don't have the money or the time to pay for one of those expensive personal finance courses, the good news is that I have for you the 7 pillars of financial independence that will help you get started on achieving this doable goal. So let's start with pillar number 1, and that's for you to get life insurance. Of course, my favorite type of life insurance is a level term policy, like a 30-year term policy or a 35-year term policy. But I want you to start with a level term policy that's going to last you long enough until you've built a big enough nest egg, or until the people who depend on you for money no longer do so. At the moment, I wouldn't worry about the other types of life insurance policies like a whole life policy. I would just stick with a level term policy and then get yourself educated on the different kinds of life insurance policies out there. But if you do the research that I've done, you'll come to the conclusion that for the vast majority of us, a level term policy where it's 30, 35 years, maybe even 40 years if that's available, is all that you need for your life insurance pillar. And if you don't think you qualify for a level term policy, I still encourage you to talk with an insurance agent who might be able to help you find some kind of product out there, maybe a mortgage life insurance product or some other kind of life insurance product that you might be able to have that would make financial sense. The next pillar of financial independence is to become debt free. At least get consumer debt free. Everything except the house, everything except the condo, everything except your home. And this part of financial independence, I believe, is best achieved with the debt snowball method, where you list your smallest to largest debts and you start paying off the smallest debt and work your way to the largest debt. So that way you have a huge lump sum that you're going to be able to take from all your debt payments and apply it to that largest debt. And if you're already out of consumer debt, consider yourself in good company. And if you don't have any mortgage debt, consider yourself in even better company. The third pillar of financial independence is to save for retirement. Now, personally, if my company is offering a match for my workplace retirement savings account, like a 401k or a 403b, I am going to invest up to the match while I am getting out of debt. But if I don't have access to a workplace retirement savings account where I can get a match, well, I'm going to look at opening a Roth IRA and trying to invest in that account. And once I'm out of debt, that's when I'm going to ramp up my savings rate from doing just the match, whether it's 3%, 6%, all the way up to 30% of my income going to different retirement accounts, maybe a taxable account as well. Bottom line, the financial independence movement teaches that you need to have a high savings rate to achieve financial independence sooner than later. It's not about retiring early, but it is about building wealth and not spending your money frivolously, but at least investing that money in different accounts that's going to help you build wealth for the future. And an important question that I always get around this pillar: what should I invest in? Now, this is not investing advice or professional financial advice. However, the financial independence community pretty much agrees that low-cost broad-based index funds and ETFs are the way to go. Now, part of this pillar is keeping a minimum 3-month emergency fund, but you can build this up as you invest. I personally would not stop investing to build up this emergency fund. I would do both at the same time because I want to take advantage and capture the match at the same time. Take the opportunity to start investing and to have that compound interest start to work in your favor. The fourth pillar of financial independence is budgeting. I know it's not the most attractive pillar that you want me to talk about, but it is a necessary one because budgeting is going to help you track your money, what's coming in and what's going out. My wife and I, we've been budgeting since February 2017, and I can tell you without a shadow of a doubt, it is what helped us get out of debt. It is what helped us start investing. It is what is helping us do the things that we want to do as a family. So we like to manually budget, but if that is hard for you to do, I have no problems with you connecting your bank account to one of these apps that's going to take into account all your expenses and all your income and show you the different categories of where you're spending money. And I'm sure those apps like Mint and EveryDollar and even Personal Capital do a fantastic job of tracking your money. You just got to take the time. No matter what, it is all about you taking some time out of your day to do your budgeting. But once you get the hang of it, it's going to be so seamless, so easy. You're going to ask yourself, why wasn't I doing this in the first place? The next pillar of financial independence revolves around your rent or your mortgage. There's no question your rent or your mortgage is going to be a big chunk of how much you spend spend each month. So that's why if you can keep it around that 20 to 25% range of your take home pay, I think that's going to help you do a lot of other things like investing and getting out of debt and paying for your everyday expenses that you need to pay for. I recently made a video where I talk about one personal finance expert's advice on buying a home. I'll put a link in the description for you to check out that video after this if you'd like, but I basically go into details on what I like and what I don't like about the principles of that expert's advice on buying a home. Pillar number 6 is about side hustles and bringing in extra income. Side hustles are important if you can manage the time and the sacrifices that you're going to have to make. This YouTube channel, my other YouTube channel, my podcast, my blog, and everything else takes time, effort, and money. I find myself sacrificing the opportunity to be with my family some nights to make videos like this on the YouTube channel. And that's where the side hustles are going to play an important part of your building wealth and what you have to do those things. You've got to find that balance between having a side hustle and also spending time with those you love, your friends, your families, because those side hustles that you do explore and pursue will have an impact, whether it's positive or negative, on your mental state, on your physical state, on your emotional state, and your relationships with your friends and your family. So explore side hustles, maybe try to find a way to balance those side hustles or a side hustle with the time that you're going to be having with your family and your other obligations, but don't neglect having a side hustle that is going to bring in a few $100s that's going to help you pay off some debt or invest a little bit more to help you achieve financial independence. The 7th pillar of financial independence is asset protection. Life happens, and sometimes at the most unexpected times, but this is why you need to establish a will, an estate plan, and consider other kinds of insurance products like disability insurance, long-term care insurance, depending on your age. But these are the kinds of things that I know we tend to avoid having a discussion about, but we need to talk about having a will, having an estate plan, and talking to our loved ones about what's in that will, what's in the estate plan, so that they can be prepared in the untimely event of someone's passing. That's an important part of financial independence. This pillar, I cannot stress enough how important it is to get those things in order as soon as you can. Now, an 8th pillar, which isn't really a pillar, it's just my personal message, is that as you go on this journey to financial independence, cherish the moments with your friends and your families as much as possible. Take time to make time to relax, to decompress, to take vacations. However you do, whatever you do, this journey to financial independence does require work, sacrifice, dedication, commitment, and I would say community. So try to get plugged into a community of people who are traveling, who are going on that path to financial independence. Feel free to subscribe to this YouTube channel where we'll continue talking about investing and building wealth and doing all the things that's going to help you achieve financial independence. And let me know in the comments section below if you want me to do a deep dive on each of these pillars and just give you more information and expand on each pillar so that you can gain a better understanding of what it takes to achieve financial independence. Now, if you're interested in learning about the 4 stages of becoming a millionaire, then check out the video on the screen right now, and I'll see you over there. Peace.